to the Real Collective podcast. As always, I am Sean Tasse, joined by my illustrious, knowledgeable, handsome, and generous co-host, Kyle Miller. Kyle, welcome to it. Happy day to you. Back in the office. How are you feeling?
With all these mortgage changes going on, there's things happening. So it's good for our industry. It's good for a lot of clients. Um, the last week and a half has been a little bit of there's been an attitude adjustment for a lot of people in a good way.
Ooh.
So it's cool. It's good.
Attitude up? Attitude.
Yeah, I think so. Yeah, I think so. I think it's been, yeah, there's definitely been an attitude up because of just the opportunities that this creates. I think Ottawa gets the trickle down effect. I think it's not directed at us. I think we'll just benefit more from it than other places. And it's a big play on the mentality of buyers and people in the market. But the trickle down effects to people that already have mortgages is also a bonus. So a lot of things get titled and headlined with trying to help first time buyers, trying to help home ownership, trying to help affordability. And there's repercussions to that, good and bad. And the people that already own more, have houses and have mortgages also benefit from it, whether they know it or not yet. So it's good it can be good all around in a bunch of different places. And again, especially in Ottawa.
Well,
So
let's
cool.
let's start the episode by breaking down those changes that happened this week. We started last week talking about the changes that happened last week, so still more changes. But in the second half, we'll get into story time, and we'll talk a little bit about how to protect yourself, either as a real estate agent or as a consumer. As always, hit that like button, subscribe to the channel, share this with someone who you think might be interested in this conversation. You can download the buyer or seller guides below. You can also schedule an appointment with Kyle or I in the Calendly links below. And yeah, we'll just, if you're listening on Apple, Spotify, or Apple Podcasts or Spotify, or watching on YouTube, those are all good things. And we'll just get right into it, talking about the changes that they're making right now in the finance world. We talked about two last week, which is a 30-year amortization, as well as being able to borrow with minimal down payment up to 1.5. One thing we didn't talk about, up to 1.5 million, was when so up to 500,000 you can put 5% down. Used to be between 500 and a million you could just put 10% down. Now I'm wondering if they're tiering that to say, hey, between a million and 1.5 you need to put, is it 15% down, or does it still ride with the 10?
Boy, Sean, do I have an announcement for you?
Hit it.
Actually, that was what we were wondering too. And we, as like the mortgage industry, and they actually just solidified that like yesterday or the day before, and said, no, we're sticking to those. We're sticking to those parameters. So it's 5% of the first 500, and 10% on anything up to 1.5. Meaning, for $125,000, you can qualify for a $1.5 million purchase. Now, just some quick numbers. Go ahead.
No, for 1.499.
1.4999999. Yes, exactly. So it's 124,900 and change, and 99 change. But but some things to keep in perspective there, right? You're gonna pay $57,000 in default insurance. That's what your default insurance bill is going to be, over $57,000, because I did the math on it. And then on top of that, income wise, go ahead.
Stretched out over 30 years.
Stretched out over 30 years for sure. But I mean, essentially, you're looking at the first $57,000 of what you're paying down. That's not interest. Essentially, gets eaten up by that, right? So, which is no different than now. It's just a bigger number.
Sure.
Right. So that's the thing. And then the other thing too is, I mean, you're looking at needing. You need to be a household making roughly $325,000, $325 to $330, in order to even qualify for that, right? That's not taking, and that's assuming you have very little to no debt, that the property taxes aren't $20,000 a year, right? So there's definitely some things to make that work. And I know there's going to be people out there who are like, why would you even do that, right? Like, I just did a deal the other day for client, 1.2 million. He was putting like $600,000 down. So what would persuade someone to say, or why would someone go in and say, hey, I'm going to put down just 125 grand,
I'll
right?
tell
Okay, you go.
so I can keep my cash in hand and I'll pay you that money. I'd rather pay you. So it's like the cash flow game. I don't know if you ever heard of Robert Kiyosaki, right?
Yeah.
Dad Poor Dad. He's got this cash flow game, and I would much rather have a briefcase full of money and defer the payments that I have to make to you, push them down the road. As I start to approach mid age and older age, maybe I don't think that as much, but you have the benefit of having cash. When you have cash, you can make that cash do work for you, and that work is making extra money. So that might be the quick answer. Some people are like, no, I want to pay down my mortgage as fast as I can. My parents told me the best thing you can do, pay down your mortgage. As soon as you pay it down, you can retire. That's sort of a government job mentality. But I feel like the people who are making 300K plus a year have maybe a bit of a different mentality, because I don't think those are sunshine list earners at the government. Those are, people who are either self-employed or high level CEOs.
And I'm still of the mind too, where it's like you have to look at comparative numbers. Meaning like, hey, like just for example, I think I did the math on it where I was like, oh, I did. It was like, okay, you had to buy $1 million, you had to put $200,000 down, and here was your payment. Now you get to buy 1.5 only, put 125 down. Here's your payment, and there was like a $777 difference. So people were like, "What?" I'm like, "Yeah, that 500 grand, after it all worked out, right? It was a $777 difference." And I'm the guy saying like, if you two people that are making, if you're combined making 325 grand a year, I'd almost guarantee it. You have two cars, and
Yeah.
you probably have a boat, and you probably have some other things that you pay for. And I'm
Right.
not saying you can't afford it. What I'm saying is you're switching where you're spending your money. So you take that extra 125 grand or 100 grand that you have in equity and you pay off everything else. And now you can readjust. You can readjust your payments, say, okay, cash flow is better. We can actually pay this much on our mortgage now instead of all this other stuff. And
Yeah.
you can overpay the mortgage and catch up. Like it's just a big math problem. It's
Yeah.
going out the door one way or the other. So
Yeah.
where does it make more sense for it to go? Right. And you have to have that comparative analysis. It's like when people say, "Oh, I got $10,000 more I want to put on the mortgage," I'm like, to save $7 a month. Like, if you have to go out and finance a couch now, it's going to cost you more than $7 a month. Keep the cash, pay for the couch, and have your mortgage be $7 higher.
Well,
Right?
and I mean, chances are your mortgage rate is going to be lower than the interest rate on your cars or on your boats or your credit cards or whatever it is, right?
Not chances. Like it will be,
Right.
but minus anybody who's doing 0%, and even then, it's like, guys,
Sure.
still, just you. It's money out the door. Make the payment. Like you want cash flow, just pay it off. Like that's my thought, but so it'll
So
be interesting to see.
yeah, no, I think that's great. Now there's some other changes that came down the pipe this week as well. A few things that just changed recently.
This we just got this one yesterday actually, where they announced that the stress test for, and some details are still trickling in here, so everybody got to chill a little bit, but the stress test is going to be eliminated for people moving to a new lender. So you already have a mortgage, you're going to move to a new lender. You won't have to qualify with the stress test. It should be just the contract rate that you're getting, which makes a massive difference to what's available out there. Because now, right there was definitely a game being played where on the back end, banks and lenders were looking at people saying like, "Hey, kind of ran your credit behind the scenes because they're allowed to."
Yeah.
And we saw that, maybe you missed a payment here, missed a payment there, but you're all caught up. Credit's not that great. Here's a rate that's, absurd for the market.
Yeah.
And I know they were sitting there being like, you can't go anywhere. You can
Right.
be mad and pissed and right? You're not going anywhere because
That,
you're gonna have to qualify 2% higher than that. And you're
right.
not going to.
Right.
So here's your deal. And that was that. Now that it's not that those people in that situation would still be approved or not approved. It's just that they can qualify way less, which should limit some of the gouging that may have been going on, right? And
Well,
that's a little anecdotal. I don't have the stats, right? That's a little anecdotal, but that's the theory. So that's going to be a huge lift for people, especially going into what you want to call the renewal cliff. in 2025 and 2026, that's going to be huge for them.
And I don't know about you, but you find me one person, I don't know, find me, more than 10% of people, sorry, find me 10% of people, so 1 in 10, that haven't had in the last 3 years a missed payment or a bounce check or a whatever, right? It happens. And it has happened a lot more for a lot of people over the last 2, 3 years. So that's going to be really great. I think, we talked about the effect. I think it might have been off screen. The effect this is going to have on people's mentality. Uh, I worry that it's not going to necessarily take effect on people's mentality until next spring. And I think we're looking at another perfect storm next spring because this all changes and you guys are excited and we're excited saying, wow, what a great opportunity. The prices are still down. Sellers are desperate to get out. There's all of these changes that are happening that are going to take effect between essentially now and closing, right? Because these are taking effect December 15th. And hey, here's a great chance to buy a house now, close before Christmas, take advantage of these new programs, and take advantage of the lower prices of properties. Wow.
I think if you're someone who's in the, and we're going to sound like a broken record here because it seems like we get onto this every single week. But if you are someone who's playing the game of I'm going to wait to see how low they go, I think that's a little dangerous.
Yeah.
But if you're someone, but if I think the perfect client right now or the perfect buyer right now is someone who's prepared for one, two, willing to take an adjustable rate. I think that's key. And then willing and looking at getting in now, right?
Yeah.
If you're not ready, you're not ready. I'm not telling you have to be, but
Yeah.
if you are, I think that's the game you play. You're going to be able to get it. You should be able to get a little bit of a deal between now and Christmas. You're going to be able to, on an adjustable, you'll be able to ride the rate down. So you're not playing the game of, I'm going to wait till they come down. You're literally just in with them while they come down.
Yeah.
Right. And you're going to get in before Christmas. You're going to get in before the spring. And I wonder if there's still more on the horizon, quite honestly. Like if they eliminate the stress test, I mean, let's face it. We are propping up, we don't do a lot. We are propping up our real estate market to a degree. Like if we call it what it is, right?
Yeah.
By doing this. And I'm not saying it's not good for people. I'm just saying that's what we're doing. And if our current government has to buy votes, they're going to keep doing stuff like this. I mean, 3 major changes in a week and a half. Then the only other thing, well, one of the few other things they can do is completely eliminate the stress test. And if they do that, that's gonna set things off crazy.
Here's the thing. I think that's too risky. I think it's what stopped us from getting into as bad shape as the States got into post COVID. Remember the States in 08 and 09 had that big fall off the cliff. It didn't happen here because of the stress test, right? So
Stress test didn't come in until 2016.
Right, but
So that was after.
right, right, yeah. Stress test came in as a result of us seeing what was going on in the States. Like, whoa, we don't want to get there. So bam, in Canada, now we had that experience where prices were dropping off a cliff and it didn't kill people because they had to stress test. So you could afford, even though you had your 3% mortgage, you could afford, I mean, it sucked balls, but you could afford your 5 or your 6%, even though like you weathered it, right? Like you went up through that insanity. And I think that stress test definitely helped it. I would say also the real estate market and like all of the sub markets about real estate. You were talking about propping. They're artificially propping up the real estate world. The real estate world, I'm saying we collectively, all of us,
Yeah.
prop up the economy. Like the GDP, 25% of it is accounted for by real estate and surrounding. So there's a reason to prop that up and to make people buy and sell houses and stuff like that because it positively impacts our economy. And if the sales are slow, if there's less going on, then it has a negative effect overall on this province's GDP. So that's my
Yeah, it's gonna be interesting to see. And now, and maybe I don't I think I want to take a word back. I don't think they're gonna get rid of it.
Right.
but I do think there could be another adjustment to it. Maybe not the rate plus 2. If we go back to 5.25, which was a special number that we had at the time. Things like that. If they adjust the adjustable rate versus fixed rate qualifying,
Right.
things like that. That's where I think there could be some major impact on the math. Well, the math, it's going to be a major impact on the math, which is going to be a major impact for everybody's qualifying. So
Yeah.
be cool.
I,
It'd be interesting to see over the
I
next 3-4 months.
I still think it takes time for that to kick in, because as much as we're boots on the ground and we're living and breathing and eating this stuff, people don't realize the effect that this has. And if they're not ready, they're not ready, right? It's when they
No,
get ready and they're like, "Oh, wow, really? I didn't think it was going to be this good." And then they tell their friend, and then, "Oh, okay, well now maybe I am ready, because I thought it was going to be like this, but in reality it's going to be like this." And then it's going to be that perfect storm. There's still not enough houses. More houses built faster hasn't happened. So, the only thing that's stopping people is the fact that they can't afford it. Well, if they can afford it, then we're going to get back to that flurry. We'll take a
yeah,
quick break, come back and talk about some things that we need to do to protect yourselves, and maybe a little bit of story time with Kyle and I. As always, hit that like button, subscribe to the channel, share this with somebody who you think might like this conversation. You can also download the buyer or seller guides below. You can download this on Apple Podcasts, Spotify, YouTube, and you can book an appointment with Kyle or I in the Calendly links below. We'll catch you on the flip side. Ciao. This episode of the Real Collective Podcast is brought to you by Real Collective Marketing, the marketing agency that specializes in the unique needs and budgets of small to medium-sized businesses. We provide turnkey marketing solutions that get results. We become an extension of your team and act as your virtual marketing department, designing and implementing cost-effective strategies that will help grow your business. You can find out more today at www.realcollectivemarketing.ca. Now, here's your hosts, Sean and Kyle. Welcome back to the second half of the Real Collective Podcast. Hope you enjoyed hearing all about our sponsor, Real Collective Marketing. If you're interested in doing some marketing for your properties, or some marketing for your real estate business or your other small business, hit up Real Collective Marketing. We have a busting up team. It's just so we're going to talk about how you protect yourself if you either are a realtor or you are a consumer. A lot of the times what's happening is you're having a conversation, like a cell phone conversation. You're going through this, that, and the other, and you just have the conversation and you think, hey, everything's cool. One thing that a lot of realtors need to do to protect themselves is to reduce that conversation to writing. Either a follow-up text message, follow-up email. Hey, here's what we talked about. Here's the lay of the land, all that sort of stuff. And as a consumer, you want that as well, because anytime you're having a conversation, if it's not recorded, you want to have it recorded. Texting makes it easier because then it is recorded. You're not having the same level of conversation on a text that you would necessarily on an email. But I would say anytime you're having a conversation with a professional, you definitely want to make sure you put it in writing. There's a few lawyers have talked about that recently at our office meetings and said, hey, people can get burned. So, take the extra 5 minutes and just, hey, based on our conversation today, we talked about this, 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 and this. We're this is the decision that we made, and this is what you're doing. Right?
I can't agree more. It's in these types of transactions, like I think of the simple things, like when I was buying my house and like we wanted all the furniture, and they're like, nope, you get this and this and this, right? Because people make assumptions. Like
Yep.
if you don't, I'm sure you've seen it before, where you don't spell out that if it's screwed into the wall, it stays.
That's right.
It's not if it's hung on the wall, it goes. So that mirror didn't stay, but the curtain rod did, or whatever, right? So, and we do it in our industry too. Like I've switched to, since COVID, I switched to a ton of video, and I actually record every single commitment that goes out the door and packaged to a client. I record a video going through it.
Good.
I can track if they watch it. I don't necessarily know that they do or don't. I mean, I don't follow up all the time, but they do sign them. And I just, so I can say, like, I went through this.
Yeah.
If they come back and say, what do you mean my penalty is calculated like this in 3 years? I'm like, guys, we went through it. It's right here. 1, I showed you. 2, I told you. 3, I recorded it. 4, you signed it. So there's nothing else I can do here. Nothing.
Yeah. I mean, that It's one thing to say it. I did one communications course in university, and from what I understand, from what I remember, communications is a two-way street. There is a sender and the receiver. There is a receiver, and there is noise in the middle, and you've got to overcome that noise as the sender. And the best thing that you can do is not just send out the information, but ask for a receipt back of, hey, I said these things. Do you understand what I'm saying? Yes, I do. Can you please put that back to me in writing? Hey, I said ba 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 ba. Perfect. Here's what we're going to do next. Please confirm that you've received this email and that you understand it. Yep, received. Da da da. Okay, good, straight. That way you're protected. If you're a realtor, if you're a mortgage broker, if you ever have to go to court, hopefully you never have to. And you know that, and as a consumer, you really want that as well, because oh well, you told me you were going to do this thing and you didn't do it, or I was expecting this and it didn't happen. Right? A lot of the times as a consumer, that would be a problem. So yeah,
It's clearing up expectations, right? What you say, dig that hole, and I say, okay, cool, you're digging a hole. Your version of the hole, digging the hole, is different than what I suspected.
That's right.
So it's got to be written down that I need you to dig the hole 3 by 4 feet and 6 inches down.
Yeah.
Right.
In that location.
And over there, not over there.
Yeah, yeah,
and it needs to be done on Wednesday.
Yeah.
Yeah.
Yeah, I mean those are all good things. So yeah, put it in writing. Very, very important stuff. We also heard about an issue with regards to some lenders. I don't know if you've seen this come through, where someone's buying in a building and the building is flagged because there's asbestos. All of these older buildings are going to have asbestos in them. They're all going to have in their articles of not articles in their condo docs. They're all going to have a thing saying asbestos provision. Here's what's going on with it, right? And so I guess there's some lenders who are getting their backup, smaller lenders more so than the bigger ones. Are saying like, yeah, you know what, I'm good. I don't want to do that. Have you seen that?
I haven't run into it in a while.
Okay.
Lots of times, what it ends up coming down to is like the whole industry is built around CYA, so that's what they need. If they're going to want to know, a lot of them can deal with it if it's going to get insured, whether that's through the default insurer or through the or just basic insurance, right? If you have insurance, there's a higher likelihood everything's going to be fine, right? And then even on top of that, are they covered through title insurance for something like that? I haven't hit it myself in a long time, but I mean, there's always little things that come up like that.
It's honestly, man, it's a function of the age, right? And yes, you have it in buildings for sure, but I mean, a lot of the times the houses we're buying are built in the 60s or in the 70s, and they're going to have either aluminum wiring, or they're going to have asbestos, whether it's in the insulation or whether it's the duct wrap or whatever it might be. A lot of the times it's going to be there, especially if you're buying a house in the condition it's in. One of the things as agents is, and we talked about this in a previous episode, is if you don't have to flag it, don't make it harder for your client. By flagging it, you can still have it resolved and remediated. But you just have to put it like, you just not, hey everybody, there is asbestos. Like, there doesn't need to be lights, camera, action about it, right?
But the other thing too, and it comes back to what you're saying about communication, putting things on paper and all that, and it's more to the communication side. This is where as the buyers and potentially as the agents too, you have to switch gears for a sec. And just because you're okay with it doesn't mean the lender is.
Yeah.
Right? You're like, well, it's not going to be a big deal because I can live with it. I'm not going to touch anything in here and it's going to be fine. And it's my risk. It's never your risk. It is always the lender's risk, because again, you're going to get the keys and die tomorrow. And now it's their problem. That's their thought process. So it's not just because you think it's okay that it's okay, right? Take the extra time, ask the question, figure out what's up, right?
Yeah.
Figure out what's up, because if you don't, you're going to find yourself in a problem.
Well, and a lot of the times it's about doing it right, asking the question the right way. You don't necessarily have to put it on paper. If you and I are working together and I found a house and it's got asbestos in it, I can call you and say, hey, we found asbestos in it. We want to resolve it. We want to resolve it on paper. Everybody wants it to be clear. Is this going to create a problem for us? And then you can run it up the flagpole and or talk to the underwriters and say, hey, look, here's what we're running into. How do you want us to deal with this so that we're still going to be okay. And then you can come back and give advice and say, hey, do it this way. And then I can go and say, okay, hey, clients, here's what the mortgage broker says to do. Let me check with your lawyer and make sure there's not some other loophole that I need to do, and then put it together in a way that's going to be beneficial and CYA. Which, by the way, if people don't know, it's not just see ya, like see you later. It's cover your ass. So I know you and I know that, but I don't know if
Sorry.
anybody else does
Yeah.
that. So yeah, that's it. I mean, it's not just applicable to asbestos; it's applicable to everything, right? The other thing I wanted to talk about real quick before we jump off is success stories or recent deals that you were put together. Something that happened. You're like, oh yeah, this is good. This is a win. I'm happy about this. Is there anything that jumps out at you recently?
Um. What's
On the
jumping into
spot.
me recently?
I'll give you one.
Yeah. Yeah.
Okay,
Go
go.
ahead. Go ahead.
You you got it.
Okay. So yeah, just I think what I'm seeing, what's interesting now is I just been working with clients coming in on renewals, and I'm still asking for all the paperwork, saying, here, let me look at this, and then I'm going to get you some numbers to consider. And tell this one client, I'm like, hey man, this is what I think we can do. And he's like, yeah, that's what my lender's offering me anyway. I'm like, cool, go back to that lender. And then, because he looked them up online, and then like what they were offering online. Then he called me back like a day later. He's like, they're not giving me that. I'm like, really? He's like, yeah, they're not going to give me that. They're going to give me like 40 basis points higher. And he said, when I told them what you were offering, they said like, yeah, we're not going to do that for you. So good luck. So just like
Wow.
that. So I don't know if that's a success story, but that is stuff that happens. And it's some of the nuance of trying to switch lenders and things where we do have better options out there sometimes. Sometimes your lenders come to the table, sometimes they don't. So it's worth making the phone call, finding out, and seeing what it is we're going to save this guy, a couple $100 a month, and it's going to be good.
Yeah, I always like clients, even if they have a long-standing relationship with their bank or whoever, to have a second opinion from you or some mortgage broker, right? Someone who's able to shop it around and see. That's the whole idea, right? Is hey, if there's something we can do better for you, let's do it. So
But I think from the broker side, you have to be willing to lose the deal though,
sure, yeah,
right?
yeah,
Like
yeah,
you have to be willing to put in the 10, 15, 20 minutes of the work, figure out the numbers, do the stuff, and then be like, yeah, you're better to stay there. Like, I don't want to lose this deal. I don't want to do the work and lose the deal at the 11th hour.
yeah,
So I'd sooner just you go away. Boy, I got a contact. I'll call you in a couple of years. Let's rock and roll then,
yeah.
you
Yeah.
know. But yeah,
It is. Hey, it is what it is, and not everyone's a winner. But when you're able to come around and help someone out, and the bank just tells them to kick rocks, it's a bit of a different, better feeling, right? I mean,
big time.
yeah. So I mean, there's certainly some personal accountability and relationship there that really helps out. For me, I'll give you my success story before we wrap it up here. We haven't done a this is the second time this year that we put a property on the market and we say no offers until such and such a time. And I wasn't super keen on doing it. The property was a little bit out of our market, closer down to the Brockville area, more so than here. But I spoke with some agents in Brockville and they said, "Hey, look, you've got a property that's going to attract a lot of attention. Price point is good. It's a bungalow. There's a big time, like 2 year wait time to get into long-term care. So, older people are looking for a bungalow with the washer dryer on the main floor, and that's what you're offering. So, and your price is pretty much spot on. So we went with a tiny smidge of a lower price than fair market value, and our strategy was able to bump it back up over. We had 3 offers after 8 showings, and sold yesterday conditionally. I mean, hopefully it all comes together. But if it doesn't, we've got 2 people waiting in the wings who are kind of sad to have missed out on it. So strategy changes. It's not always the thing that I would suggest in the market that we're in right now, but um, it seems to work. It seems to still work. I mean, you listen to Ryan Serhant, and he's always saying, "Hey, you know what? You can't list it too low." Right? The fear is that, oh well, I'm going to list it. I'm going to list it too low. Even if I get multiple offers, I'm not going to get as much as I would have got had I started a little bit higher. Right? So it's finding that sort of that sweet spot. So
Chasing the market's never a good place to be.
no, no, especially
No.
especially if it's going down.
Well, yeah, like that's the thing. I mean, I think you have to be honest with what's going on, right? Things have slowed down.
Yep.
Things have slowed down as much as there's still demand. It's still slowed down. It's still relatively pricey. You're only going to get as many people as you can get, so you have to be bang on. I think you've proven that time and time again. Watching the market, it's proven itself time and time again this year specifically,
Yeah.
right?
Yeah.
Like we are not in COVID anymore.
Yeah.
We are not.
Yeah.
So like but people still need to move and buy, and it has to be like there's nothing beyond pricing it right. Not nothing, but there's very little beyond pricing it right.
Yeah, I think every time I meet with a new seller, that's the conversation I have is this is the number one most important marketing decision that you're going to make is choosing the right price for your home. Obviously, it's always up to the client, it's up to the seller what price that they want to choose. I'll tell them what I think that they should do, but ultimately it comes down to their decision. Risk and reward is a conversation we have as well. But yeah, I just don't think you can really underprice a home right now. Even if you do, the market will get you back there. I just
It'll slap you. It'll slap you around.
That's it. All right. Well, that's about finishes it up for us. As always, hit the like button, subscribe to the channel, share this with someone you think might like this conversation. You can download the podcast on Apple or Spotify, or you can watch it on YouTube. You can also download the buyer or seller guides below. And if you'd like to schedule an appointment with Kyle or I, you can do so in the Calendly links below. And until next time, keep it real.
Collective.